All right, and now on to part two. We're going to talk about blockchain and crypto beyond 2026. Let's do this. What was the star of 2025? Revolutionizing asset ownership, RWAs, right? Like we talked about in the last video, real world assets was the star of 2025. They were responsible for over 180% increase on 2025 alone in adoption, in acceptance, in really delivering on the future of tokenization is the way to go, right? So fractional ownership is set to change the world and the way we interact with the buying and selling of goods. Imagine a world where you can easily buy and sell small pieces of almost anything, right? Look, if you catch some of my other videos, I talk about tokenization. I give you so many examples, and I'm gonna give you a great example. We're gonna really focus on real estate tokenization because that is probably one of the best ways that we can deliver on this idea that the future of tokenization is growing at an enormous and a super fast rate. But this is definitely one of the most exciting areas of the RWA is tokenization of real estate. So what's the outlook for DeFi, right? DeFi, decentralized finance, for those that don't know, we talk about hybrid finance, a deeper convergence between traditional banking and blockchain, with tokenized deposits and stablecoins becoming standard settlement tools. As you can see, I did give you a couple of the references there, so you can go ahead and take a look at that. One of them talks about JP Morgan tokenizing and rewiring Wall Street moves. And it talks about HSBC to offer tokenized deposits. So that's another bank that I didn't mention on my last video that are allowing for tokenized deposits. So these are some of the things happening. When we talk about um, um, traditional settlement tools, when we're talking settlement basically means that when you do a transaction and you are waiting for a payment or you're sending a payment, that's the settlement, right? In that settlement, you use US dollars if it's talking about the petrodollar when you're talking about oil, right? And so these are the type of things that's been traditionally used. But when they're sanctioned, right, these countries get sanctioned, then a way around that is obviously crypto. And so they use tokenized deposits. This is becoming mainstream now. HSBC, JP Morgan, but the highest level international, the Bank of International Settlements, BIS, is using this as a standard as well. So this is something that's going to happen pretty much all across the globe. Pretty much every region is going to be utilizing tokenization to settle these type of payments. XRPL integration, that right there raises some eyebrows because a lot of people are like in the army of XRP. Like they really have an affinity for that token alone. The rise of machine native deposits will allow banks to hold XRP on their balance sheets and conduct on-chain transactions. Phenomenal. Just because one crypto, like there are others out there that are trying to get on chain, they're trying to get, banks to use their actual crypto because that really takes them to the next level in adoption. XRP has been on the track to become like a traditional bank, like as far as in the compliance and regulatory areas. But these guys have already integrated into some banks, whereas they're being allowed to hold XRP on their balance sheets. That is phenomenal for crypto. But here's what's very, very interesting on top of that, right? XRPL, which is the XRP ledger, right, is what the Dubai Land Management Office or Land Department Office is using to sell tokenized real estate. You have to purchase it with XRP, which is on the XRP ledger, and it is crushing it, right? You know what? I want to see if I can pull that up. Anyway, I'll do that at the end of the presentation. I want to show you something. I saw an article that's just powerful, right? Um, Another part, DPIN. DPIN is something that I can get into and have a conversation about. I talked about it last year sometime, but there's a crypto company called XRP or XY Labs that launched in 2018, and they are just growing and growing and growing. They were one of the first to do RWA type transactions and build an infrastructure before it was even called RWA or DPN. DPN is kind of like the overarching topic or title that incorporates real world assets, right? Tokenization, DeFi. That really is part of DPN, right? In the no name sense, right? Before it has a name, they were already doing these type of things. So in 2026, core infrastructure narratives will center on the convergence of blockchain, AI, and real world systems under a maturing regulatory umbrella. And so now we're going to start hearing more about DPN type projects that we really didn't even know was happening. DPNs, they are actual infrastructure projects that take a longer time to really come to fruition. And so we won't hear about things that just happen today. It's going to be something that's been going on for maybe a year plus. And then DPN is going to become like a household name. DeFi expansion, anticipated regulatory innovation exemptions may pave the way for more complex project products like stock perpetuals and uncollateralized lending. That's one of the things that is very powerful in the yield farming as well as the DeFi, lending is a very powerful tool, right? You got collateralized and you got uncollateralized. Right now, you can actually take your crypto and you can uh, stake it or what they call dock it, or I forget, there's a word for it. And you can leave it on this network in this particular project, and you can borrow against whatever you put into that safe place, right? And so that's happening. And then you have that's collateralized, and then you have uncollateralized, depending on not your credit score, but something similar to your credit score. They have a way to evaluate, your particular net worth and then see if you're a worthy person that can do that. So a lot of great things happening. Like I said, you can look at the reference, get more information about that. So yeah, I mean, everything today we're talking about tokenization methods and use cases. So I'm gonna get into some of those as well. But we know that tokenized assets are projected to reach a $16 trillion mark, which is about 10% of global GDP by 2030. Some say by 2034, you're talking about 90 billion trillion, I'm sorry, 90 trillion. Like it's just growing ridiculously high. But as you can tell, all of these different categories, it's uh it's where you want to be, period. So we're talking about tokenization, market growth, and scale. Just really focus on that tokenization, right? Like I said, the reference is there if you want to check that out. But we're talking about total market value of tokenization. You're talking 30 billion by 2025. Some reports say 30 billion, right? And so late 2025. And so by the end of 2026, it could be something just way more ridiculous. Expansion rate, we're talking about in 2024 alone, the non-stable RDA, stablecoin RWA market increased by 85% year over year. Future projections, many analysts predict that RWA sector will reach a market size in the trillions. We're talking 10 to 16 trillion dollar mark by 2030. So definitely where you want to be. So, what's the leading asset classes that are under the tokenization umbrella? We're talking about tokenized US treasuries. I'm going to get into that like deep in a minute. This has become a dominant category with products surpassing $7.4 billion dollars by mid 2025 and an 80% increase year to date. Major funds like BlackRock, right? Budil or Build and Franken Templeton's Benji, these are prime drivers. These are two, and you want to check those out because these are things that have helped to build up tokenization and actually deliver and show that it is possible, right? And that's where adoption has just taken off. So private credit is another area that's leading in asset classes. As of mid 2025, tokenized private credit reached approximately $14 billion, representing the largest non-stablecoin RWA segment. Very, very powerful. Private credit, because a lot of people have made a lot of money with Bitcoin, especially when it went to 126,000. And so when that happens, people pull their money out. And we know there was a Trump coin that came out, hate it or love it. Trump coin came out early in 2025, and we saw some people made a fortune, some people basically got busted or got wrecked. So at the end of the day, there's a lot of money that people have. And when you have that money and you don't really know what to do with it, you can lend it out. And so a lot of private credit, and that happens at peer-to-peer level, right? And so, but there's like Chain Analysis is a regulatory body that actually captures a lot of these type of transactions on the blockchain. So these are some of the things that happen as well. Commodities, gold remains the leading tokenized commodity with products reaching over 45 million in market value, right? Right now, gold is the leader. Silver is definitely, if you're talking tokenized commodity, gold is definitely at the top. The second will be silver because in stocks and trading, traditional side, silver basically had a high APY. But then when it comes to 2026, we're looking at copper and platinum pushing for the leadership position in the commodities section. Excuse me. And then real estate, the fastest growing segment that has reached a $20 billion by mid 2025 and represents attractive investments with the tokens. That right there tells the story. We got 7.4 billion for securities. We got 14 billion for private credit. We got 45 million for commodities. And then real estate is sitting at 20 billion in mid 2025. And we're already in 2026. So you know this is a space that you want to be in, right? So I've told you all that. Some people are sitting here saying, what is digital money in the first place? So let me dial it back a little bit and let me give you some insight. Think of the blockchain as a public spreadsheet that everyone can see, but no one can change. And cryptocurrency is secured within that blockchain. It is a form of digital asset that allows peer-to-peer transactions without banks or government. It is a new asset class of emerging technology with high growth potential, unique risk reward dynamics. Some have used cryptocurrency as a hedge of inflation, and getting in early gives you more upside than otherwise. Some think of the volatility of crypto, it is part of the crypto DNA. Volatility is volatility. It can go up, it can go down. You can make a lot of money, you can lose a lot of money. You can win big in a short time, or you can go steady and win over the long term. Bitcoin was about $100 per coin in about 15 years ago. So you're looking at about maybe 2010. What if you would have bought a few Bitcoin back in 2010 and held on to it until today, maybe 2025, even into 2026, when Bitcoin was over $100,000? Just think about that. If you would have had a 4 or 5 Bitcoin 15 years ago, you held on to it, forgot about it, and then Bitcoin went to over $126,000 in 2025. You would have been jumping up and down. This is where we're at today. Why does crypto matter? Why does this matter? Just like I asked you at the beginning, what's in it for me? Why does it matter to me? Decentralized finance is reshaping global markets. Hedge against inflation and fiat instability. This is crypto. This is why it matters. Gold and crypto go hand in hand. Institutional adoption is accelerating. You got to get in the game, get on the train, or you will get left behind. Tokenization is unlocking new asset classes every day. This is taking over every aspect of finance. Here are signs of institutional maturity. From pilot to production, large financial institutions such as HSBC, JP Morgan, and Santander have moved beyond testing to launch production level tokenization platforms and products. Regulatory progress is happening as well. Growth is being fueled by clear frameworks like Europe's MACA and regulatory sandboxes in Singapore, Hong Kong, and Japan, and including what we saw earlier in the US. Infrastructure integration. Traditional financial infrastructure providers like DTCC are actively working to bring high level assets like US Treasuries onto blockchain networks. One of the things that I want to highlight is the DTCC, right? I saw that acronym, I heard that acronym, didn't know what it was. So, first thing I want to do is just give you that definition. The DTCC is the Depository Trust and Clearing Corporations. This is an American financial market infrastructure company that provides clearing, settlement, and trade reporting services to financial market participants. This is the end all settlement agency for all of the transactions in the US. It is ridiculously important and it runs a high volume through their networks. So when I say traditional financial infrastructure providers like DTCC are actively working to bring high value assets like US Treasuries onto blockchain networks, you know that there's a high level of trust in the blockchain and crypto industry. DTCC is the Depository Trust and Clearing Corporation. Definitely something that you want to understand. Who are they? DTCC is a crucial U.S. financial market infrastructure company that provides clearing, settlement, and trade reporting for securities, acting as a central custodian and facilitating the smooth exchange of stocks, bonds, and treasuries, recently making headlines for exploring tokenization with blockchain technology for some assets. Okay. In a nutshell, we're talking about the American financial company. They do all the settlement and reporting. It's a centralized agency and it's adopting tokenization. That says it all right there, but there's more. Bloomberg article has reported that U.S. Securities and Exchange Commission has granted the Depository Trust and Clearing Corporation, DTCC, permission to begin tokenizing assets like stocks, bonds, and treasuries. Yes, the DTCC, the SEC, at that level, they have given authorization to tokenize stocks, bonds, and treasuries. Do you understand how big that is? Well, let's talk about it. Here's some key highlights of that particular agreement. The approval is the SEC issued a non-action letter, right? A no action letter providing a legal green light for the DTCC to custody and recognize tokenized equities on chain, on the blockchain. Two, duration. This permission is currently set for a 3-year period, allowing the DTCC to offer these services on pre-approved blockchains. Why is this so important? This is considered a major step towards integrating traditional financial markets with blockchain technology, potentially increasing efficiency in how securities are settled and tracked. The DTCC processes over $3.7 quadrillion in annual transactions. Yes. You know how sometimes we say, that's not millions, that's billions with a B. Oh, okay, that's trillion with a T. This is quadrillion with a QD. This is crazy. Like, this is way, way, way up there. So adoption is already here. So this program will initially focus on a specific set of highly liquid assets to ensure stability. We're talking about equities. We're talking about Russell 1000, right? 1,000 largest companies in the U.S., fixed income, U.S. Treasury bills, bonds, and notes. And we're talking about exchange traded funds and tracking major indices as well. That's everything, everything. So real powerful, real happening. You definitely got to know that tokenization is delivering on the adoption that everybody has been looking for. Some of the real world use cases that I want to talk about: BlackRock, real estate tokenization. It is the future of ownership. BlackRock, the largest asset manager in the world, right, is the one telling us today that tokenization is the future of ownership. Real estate tokenization is the future of ownership. Fractional and digital ownership is the future. The rise of tokenized real estate marks a turning point in financial history. BlackRock's involvement adds legitimacy, while securitized and city protocols technology provides the foundation for a decentralized, interoperable future. If one were ownership is no longer defined by paperwork and borders, but by transparent and digital proof of stake. So this is what is ushering in this new era. Ownership not defined by paperwork and borders, but defined by transparent digital proof of stake. In 2025 and beyond, the question isn't if tokenized real estate will dominate global markets, it's how fast it will dominate global markets. When we talk about tokenized real estate, picture this. Imagine owning a part of a condo or a commercial building in Moscow, Dubai, or even Tokyo through a tokenization platform, earning daily, monthly, and annual income without ever physically visiting that property. Yeah, picture that. This is one of the best examples of offline to online or on-chain use of the blockchain and crypto technology. A variety of platforms have created access for traditional businesses to tokenize their offerings and offer them in fractions of shares to the public. Some are in the form of utility and some are in the form of security tokens, right? So the couple that I know, Estate X, Revolutionary, doing things right, they offer it under a security token platform. E-Estate offers it under utility, right? So you have the opportunity there. E-Estate is direct to the investor. Estate X is launching their token. And so a lot of what they're doing is tied to that token. So you got to be careful about that. All right. Dprop and Prime Pripco Mint are both associated with the Dubai Land Management Corporation or Land Management Department that is tokenizing their real estate and offering that. So they're the ones that are processing it on the blockchain based on whatever your purchase is. Very powerful. But Dprop is just launching their token in January 2026 on the exchanges. So pretty powerful. So there's an article that you should definitely check out at Market Insider. E-Estate Group Incorporated expands its global platform for tokenized real estate investments. And so E-Estate operates within this space by offering fractional access or ownership to physical properties through legally structured blockchain supported investment models. This is one of the leaders in this particular industry. They have really set the stage for anybody and everybody to have access to premium properties in prime locations around the globe. Daily pay, right? Active phase of income, passive phase of income for life. Nobody else is doing that. E-Estates offers real properties, right? They're verified on chain. They're insured, they're tokenized, audited, LEI verified, and community focused. So you can help to spread the word and build a massive team of digital real estate agents that can grow and grow and grow your monies, your business, and your reach. Build your portfolio with digital real estate with e-estates. That is really the move. Now, there are some strategic possibilities for investors. This is not financial advice. This is a research being distributed for your entertainment and education. Consult your financial advisor for any investment advice, especially when it comes to crypto, right? But if you have a portfolio and you're growing your portfolio, real estate tokenization definitely should be a part of that. But here's just an idea that you can hold on to. This creates a clear path for institutional adoption via stablecoins. It encourages responsible innovation in tokenized assets and payment systems, positions crypto as an emerging asset class that cannot be ignored across the globe. These are some possibilities for crypto and tokenization and adoption. Your portfolio should have at least 5 to 15% allocated to crypto, period. Diversify across sectors, DePIN, DeFi, utility tokens, staking, RWAs, which is your real estate, tokenization. Use tax advantage accounts wherever possible. So definitely keep that in mind when you're making a decision. At the end of the day, Don't just watch the wave. I know how we like watching waves. I mean, it's a beautiful thing. You should ride it. This is the wave that's happening. Web3, AI, crypto convergence. That's the wave. Tokenization. That's the wave. Tokenizing stocks, real estate, IP. Those are waves that are happening right now. Early stage projects, real world utilities. Digital oil rush is here. These are the waves. Don't just watch them, ride it. This is the year of tokenized asset adoption. It's 2026. You can become that tokenized adoption millionaire. Not financial advice, not a promise. You can win or you can lose, but you definitely got to ride the wave in order to win the game. That's my presentation. I thank you for listening, and I hope that you got some value out of this. I'm Rashid Hill, better known as Coach Rashid, founder of Team Achieve Prosperity Club and the Core 4 to Soar Ambition model. You can find everything about me at knowofme.net, and I'll see you on the next one. All right, peace, and I'm out.